All right, Rupee continues to fall against the USD. The unit hit a fresh low for the fourth day, closing in at 79.83, with US inflation data fueling speculation that the Fed may raise key interest rates by up to 100 basis points. This free fall in the rupee has continued despite a slew of measures from the Reserve Bank of India to increase forex inflow. Now, earlier today, my colleague Mythili filed this report on the government's response to the slide in the rupee.
Yes, with the rupee touching an all-time low of 79.9, almost touching 80, we had an exclusive conversation with the Finance Secretary TV Somanathan, who told us that there are certain limitations to which the rupee can be managed and controlled. We had seen some measures from the RBI, but the Finance Secretary told us that this effect that we are seeing is basically not due to the rupee weakness, but due to the dollar strengthening, which is a global phenomenon that we are seeing. So if we compare rupee with the euro or the pound, there has been no change in the exchange rate, but this phenomenon is being seen only related to the dollar because we are seeing the US interest rates on a high, inflation is high, and thus there is pressure on the capital account, and thus money is flowing out. And because expectation is further on the hike in interest rates in India, because of which we are seeing this particular phenomenon. He also said that current account deficit may not rise that much if the exports increase. If we are able to increase the exports, then current account deficit may not be impacted. Also, speaking on the fiscal deficit, he did tell us that because of the increase in revenue in both direct and indirect taxes, there is an expectation that it's unlikely that they will exceed the borrowing for this financial year. Thus, fiscal deficit, they will be able to manage within the targeted 6.4%. So there are two big things that he told us. One, on the fiscal deficit and borrowing, which they will manage, which will not increase because of the kind of GDP growth that we are seeing. So though the expenditure will increase, but they will manage the fiscal deficit. Also, on the rupee, he said that there are limitations to which it can be managed and controlled. But however, this is not a rupee weakness phenomenon. This is a dollar strengthening factor that we are witnessing.
All right, so what next for the rupee? Mythili Bhusnurmath, consulting editor, NOW, and Anubhuti Sahay, head of economics research, South Asia Standard Chartered Bank, joining us now on the show for more. Now, meanwhile, rupee closing to 80 has become a huge issue. It's become a meme. People are talking about it. Mythili, I want to come to you first about the sort of response that is coming in from the government, that it's not us, it's them. Basically, it's the dollar that's strengthening. It's not a rupee problem. It's more of a dollar strengthening problem. Is that the way to look at it?
Well, the dollar is certainly strengthening, and with the Fed all set to raise interest rates, given the fact that inflation has come in at a 41-year high, the fact is that this is going to continue. The trend is going to continue. The rupee is going to weaken further. The fact that other countries' currencies are also weakening is not much of an answer, really, simply because of the implications of a weakening rupee for us. At a time when inflation is already pretty high in India also, a weakening rupee means further imported inflation. Given that we import about 80% of our oil requirements, that also has huge implications for our current account deficit, for our fiscal deficit, since government obviously beyond a point does not want to kind of pass on the higher prices to consumers, because even though we say technically oil prices have been deregulated, we've seen that every time there's an election, every time prices rise too much, the government does intervene. So weakening rupee, it's not whether it's 80 or 81, and the RBI has always said that they're not really so concerned about the level as the fact is the pace of change. They're trying to control the volatility. And as we've seen central banks after central bank, today we've seen the Bank of Canada, the Central Bank of Philippines, we've seen the Monetary Authority of Singapore all raise their interest rates. So there's only that much countries can do. And as long as the US dollar strengthens, you have this peculiar situation where the US, they say, is heading into a recession, but the dollar is considered the safe haven. So that arises out of its international reserve currency status. And as a result of which, when you see dollars flowing out of countries like India, the rupee is going to weaken. So yes, it is largely correct that the rupee is weakening mainly because the dollar is strengthening, but that doesn't make life any easier for us, unfortunately, Tamanna.
Anubhuti Sahay, we also need to look at it in the context of whether the rupee is weakening at a faster pace as compared to other currencies. The euro seems to be holding up fine. Can you break that down for us?
Yeah, I mean, absolutely. The kind of depreciation which we have seen in rupee, it's definitely less than what we have seen in other peer currencies, where the dollar strength story has shown up in a much more pronounced manner. And I think if you are talking about euro, we have clearly seen it's trading below parity temporarily, and that is the trend which is likely to persist as long as there are expectations of strong rate increases from the Federal Reserve, and as long as the gap between interest rate of Fed and ECB exists. Now, when you're talking about Euro INR, I think there is a clear strengthening. So the point which you were making, is rupee depreciating at the same pace as other currencies? The answer is no. If you look at the Euro INR, it was trading well above 83, closer to 83 levels, just few days back, and now it's almost at parity, right? So we are at 80. So there is a clear strengthening which has happened in rupee, and that to that extent, it shows that rupee has not moved almost in line with a dollar. There are reasons. If you look at the fundamentals, the rupee fundamentals are far different from euro, where the risks of recession are much higher, where inflation is much higher than India. Those factors are there, but at the same time, I think RBI's intervention has also played a role in containing the pace of depreciation. So, I think what Mythili mentioned, depreciation is here to stay for most of the currencies, including rupee, as long as dollar strengthens. And that we think is likely to remain a dominant theme. But the pace of depreciation, whether it is INR or any other currency, would depend on fundamentals plus the kind of action which every central bank takes for their respective currencies.
Ms. Sahay, I must ask you, rupee at 80 to the dollar, what does it say about the strength of the Indian economy? Because in everyday parlance, and because, rupee at 80 has also become a national headline, the way people are equating it is a weak rupee equals to a weak Indian economy is equal to, bad governance. But is essentially rupee at 80 reflective of a weaker economy?
I won't agree with that statement. I think when we talk about exchange rates, it's always a relative, we have to look at the relative story between India and what's happening, to the currency with which it is getting compared to. Besides the fundamentals, which play a clear role when it comes to an exchange rate, what also matters is, the status of the currency, what Mythili was mentioning, reserve currency. If you talk about the fundamentals, it's true that probably the US economy has done much better than the Indian economy. But if we talk about next 6 to 9 months, the economic growth story of India is looking far better than US. Secondly, if we talk about inflation, inflation is a problem in India as well as in US. But in case of US, probably inflation is a far bigger concern. Given, we had a 9% print last evening. In India, we got a print which is closer to 7%. None of the inflation numbers are comforting. But again, the inflation story probably is not as bad as it is in US. I mean, in India, 6-7% inflation is expected, but in US, inflation is at a 4 decades high. So from that perspective, also, it's not a very comforting story. If you look at the twin deficit story, it's not that US is doing scoring very high on the twin deficit story. What makes dollar stand out, despite such fundamentals, is its status of reserve currency. Usually in the FX market, we call it dollar smile. That is, in extreme scenarios, either if if US economy is doing exceptionally well relative to the other economies, or if there is a huge bout of risk aversion because of any factor, whether it is about US growth or uncertainty about how growth will do over the next 6 months, dollar always strengthens. And that is what is playing at this particular juncture. Market is struggling with the uncertainty on how deep a recession would be or how many more rate hikes Fed would do. And in this kind of an uncertain period, there is always a flight to safety. And in this scenario, it's always the dollar. So I wouldn't agree that a weaker rupee is can be equated to a weak economy. It's a relative story. It's a reserve currency status story, and we need to keep all factors in mind while looking at the rupee, dollar rupee exchange rate.
Mythili, I'm going to ask you that same question about whether, this signifies the weaknesses in the Indian economy, because we are a current account deficit economy. We depend largely on imports of crude, etc. Is all of that also being reflected in the rupee dollar rate today?
Well, these factors, or the fact that our fundamentals in terms of a high fiscal deficit, a relatively high current account deficit, and also the fact that we're dependent on oil and oil prices have been high, has not been a recent phenomenon. It's been there for the past quite a few months now, ever since the Ukraine conflict started in February. So, but the rupee depreciation is relatively much more recent. So the fact is that to look at it, think of the rupee value as reflecting the weakness of the Indian economy just because it might touch 80 rupees to the dollar, that would be a very simplistic way of looking at it, Tamanna. Because as we saw from the earlier speaker, also Anubhuti, the fact is that you have in macroeconomics, you don't have these neat one-to-one solutions. You have the irony of the US almost perhaps heading into a recession or perhaps already there. And yet you have the US dollar as being the safe haven, precisely because of its international reserve currency status. So the fact is that you don't have these neat answers in macroeconomics. You have these somehow contradictory, signals. How is it an economy which is almost going into recession, where growth is perhaps, it was negative in the first quarter, possibly negative in this contracting in the second quarter as well, but jobs data looks very good. So you have these different conflict kind of signals. So it's not easy to say that, it's that, oh, well, just because the rupee touched 80 rupees to the dollar, that means the rupees, Indian fundamentals are very weak. Yes, sure, our fundamentals are not as great as they were before COVID, but that is true of every economy. And this is a function of the relative, strength of the various exchange rates. So it is a fact that the rupee has weakened primarily against the dollar, not against other currencies, and every currency has weakened. So the fact that we have substantial reserves, though they have fallen, as the Reserve Bank has tried to defend the rupee, is a source of comfort. So all said and done, I don't think we need to look at 80 rupees to the dollar as though the skies have fallen. They haven't. But yes, it does create problems for us, I said, particularly as far as inflation is concerned, because imported inflation will rise at a time when inflation is already very high. We saw the WPI today at 15.01, which is not a comforting factor at all. 15 consecutive months of double-digit WPI, which will feed into our consumer price inflation. So that really is a bigger worry for us.
All right. So putting that into perspective, you will possibly see the 80 and beyond 80 number in the next few days. But like age is just a number. The value of the rupee beyond a point is also a number which has to be looked at in all of that context. Thank you so much, Mythili and Anubhuti, for joining us today.